Hey everybody, Jeremy here. Sorry I'm coming at you a day late with today's weekly prep for the week of Monday, February 27th. I had some family come into town yesterday and spent all day prepping for that to see my nieces and sister and brother-in-law, and things just got a little carried away, so my apologies. Ended up actually working out, I think, in everyone's favor because we got to see the price action from last night and today play out. And where, yesterday we had kind of pushed up a little bit, we had reclaimed the 50 period moving average, and it was looking like we might be bottoming a little bit there. Today's price action here on the S&P 500 futures chart is telling a bit of a different story. We have 1 hour left until the futures market closes. But if I zoom in here, you can see this kind of inverted hammer candle where we had pressed all the way up. Prices had bought all the way back up to that 40.25 level that we had originally said was kind of a significant level. We hit that almost to the penny. We got up to 4,024 and 75 cents. So 25 cents off from that price point of 40.25, and then intraday reversed back. If we drop this into, say, a 15-minute chart, you can see this vicious attempt to rally, and then this big vicious drop, rolled over, had a little double top here around 4,000, and then broke down and are now kind of coming back up to test the underside of that resistance. On the intraday chart, I have to say this is probably moving a little bit lower. We have broken the diagonal support line here on the intraday. We are now setting lower highs and lower lows, and this is just pushing back up to kind of test into this resistance zone we have around 39.90. So anyways, below 39.90 is having to point to the downside for the intraday chart. If we back this out to an hourly chart, you can see that we're also fighting here with all of the moving averages clustered directly overhead. So that zone from 39.90 up to, let's say back up to 4,000 is going to be really key right now. We can see that 4,000 level has played out over and over again over the last days and weeks. So 4,000 is a spot that I definitely want to have an alert set. If prices get back above that, I'll start to get a little bit more interested, bullish leaning. But right now, like I said, on the daily chart, that hammer candle mixed with the intraday analysis of that really has to show that there is likely some more downward pressure to come. If we draw out a diagonal support line here, we are actually hovering right above it and the 200 period moving average here, simple moving average. So both of these things should play a role holding the market up, adding some support underneath. But if that level gives around 39.49 to 39.50, so we really need to see closes of the day stay above 39.50. If that breaks, it's going to be a really short drop to 3,900, and then ultimately probably 3,800 as that next support level. So it's going to be really, really important to see this level hold, because otherwise we have another about 150 point potential drop to the downside. If we toss this out onto a weekly chart just to do our multiple time frame analysis, we can see that we are getting pinched right now between the rising 20 period moving average and then overhead resistance with both the 50 period moving average and the 9 period exponential moving average, both of which are acting as resistance to the top side. It would be fantastic to see this week stabilize above this diagonal support line, continue to pinch throughout the week in a tight trading range here, and then ultimately break back above the high of this candle, and also coinciding with the high of this breakout point over here, which lined up to 4,035. So if we get back up above 4,035, that is the new line in the sand where I am going to be leaning bullish and looking to add bullish positions. Below 39.50, I am going to be looking to protect my account and add either put options to play the downside and earn some money on the downside, or if nothing else, at least selling some covered calls and stuff to bring in some premium and offset some of the volatility to the downside. So those are kind of our two lines in the sand, 4,035, excuse me, and 3,950. Let's bump out real quick, take a quick peek at some of the other indexes. Bitcoin's not doing anything wrong. I don't particularly like this rounding of the top here. I would much rather see that high base up tight against 25,000. The little rounding nature that we're seeing on this on the weekly chart gives me a little bit of hesitation. You can see it here again on the daily chart. I have to say that my base case on this, if the market as a whole doesn't get a bid higher, my base case is that this support on the 20 SMA is going to probably give, and we will likely consolidate here sideways just above or at the pivot from this previous pivot point. And we can look back and see that that same line was a very important line in the sand here around 21,500 to 22,000, that kind of range. So I'm kind of expecting right now that we're going to pull back and retest that. That'll also give time for the 50-period moving average to come up and coincide with that, and hopefully see this 200-period moving average continue to flatten out and act as a little bit of support there. So that is the level that I'm looking at there. If we go out to gold, gold has just been on a nasty sell-off ever since it peaked here a few weeks ago at the beginning of February. Nothing to see here until it gets back above the green 9 exponential moving average. So it has a little bit of work to do here. Hopefully we can get some support here, a little bit of a base, and then a follow through to the upside. But this is going to be heavily dependent on the dollar index, UUP. You can see today that UUP did pull back a little bit. Don't know why that zoomed in so far. There we go. Did pull back a little bit, but it is right on top of its rising diagonal support line. We really need to see this break down and get below 2820 to see the equities market really get some life breathed back into it. So that's kind of what I'm looking for on the dollar. On copper, if we move to copper futures, we had a nasty fake out to the upside here. And I actually said intraday here on the breakout on 221 that I really didn't like the intraday setup on that, because every time that we had these moving averages, specifically the 20-period moving average, turn sharply lower like it did right here on the intraday, usually that meant that we were getting closer to a top and that there was probably some more downside to go. So I kind of said that right there. I did not like the sharp nature of that pullback on the 20 SMA on the intraday chart. And sure enough, we did get a little bit of follow through pop, and then it just dropped out from underneath. It is now below all the moving averages. This thing is going to need quite a bit of time to be able to clean itself up. So I'm not really interested on much here on copper. Natural gas is an interesting play right now. It is breaking out above the highs of this kind of consolidation pattern, which is a good thing. However, it is up a decent amount over the last 4 trading sessions. As a percentage, it's up 39% in 5 days. I don't know about you, but I'm not interested in chasing anything that is up 39% in 5 days, no matter how much momentum is behind it. There's just too much risk there. It could end up moving higher and coming into that $3.11 range at the 9 weekly EMA. But really, I'm going to be looking for a secondary pattern on this if I ever decide to play the lows here of natural gas. Ideally, I would like to see it come down and retest this low again, give us a little bit of a W formation, and then confirm higher with the break of this 50-period moving average coming down and lining up in this similar zone. So that's kind of the ideal situation for that. We'll see if we get it or not, but until we get a secondary pattern there, I'm not really interested in natural gas. Moving on to the NASDAQ, nothing really to see here. We had a nice strong run. We had a double top M formation. M is for murder. And that means that stock is setting up to just get murdered. And sure enough, we broke the line in the sand here. and now we've tested it once and stayed below it. We broke below the diagonal support on the short-term daily uptrend, so that trend is now over. We need to see some consolidation and some cleanup here for any plays on the NASDAQ. Finally, going into the Russell, very similar thing. Instead of having an M formation, we just set a lower high right out of the gate, broke that neckline, and now have tested it and gotten smacked back down. Now we are solidly into this same consolidation zone and underneath this very important resistance zone around 1910 that we had fought for months, going back all the way back to basically early November. We'd been fighting that same zone, did get above it temporarily, it got smacked back down. So this also needs some time to clean up. It probably has a little bit lower to go. I would guess that we're going to come down and test the 50-period moving average, which is going to be around 1870, and hopefully see some stabilization in that 1870, 1875 range before the next break higher, which would hopefully coincide with breaking this diagonal resistance line and being able to move to the upside again. Just looking at it on a weekly chart really quick, the weekly chart actually does look pretty good. It is holding obviously above its 20 and 50 period moving averages, which should act as support. But it is below its 9 EMA there and the diagonal resistance. So this diagonal resistance line is going to be the most important line in the sand for the Russell 2000. And then I said finally for the Russell, let's just look at the Dow Jones real quick. I don't often look at the Dow Jones, but right now you can see a double top here sitting right at support. So this is that murder, M for murder, right here. And if we break that line in the sand, which is basically the 50-period moving average at 32,640, if we break below that and close below that, my guess is that it's going to be dropping back down to the 31,000 area. So that's kind of my base case for that if that breaks. Otherwise, hopefully we can see some movement to consolidation right at support here, and then finally a move higher once that consolidation occurs. But that is not a gimme right now. We really have to see this line in the sand at 32,640 hold if we want to remain bullish on that index and everything in it. So anyways, that is the update currently, guys. I hope you are doing well. This week is going to be a very important week to see if these levels can hold. I am probably going to be doing mostly cash flow options trades and just monitoring the stock market for the next few days, closing out some trades when I have opportunities to, and just kind of sitting on my hands to wait for all of this to play out. This market has been an incredibly hard market to trade the last about year and a half to 2 years. It has defied logic at every turn. It does not make a whole lot of logical sense on the surface. And the moves can be sporadic to the upside, huge, big green candles, followed by just getting smoked back down. Big, huge green candles getting smoked back down. So this volatility on the drops just coming out of nowhere, the volatility coming back in has been very difficult to predict. So if you are trading, make sure you have good stop losses. Make sure you trail those stop losses up as you lock in gains, and aim to get your stop loss at above break even as soon as humanly possible. So if you take a trade and it goes your direction for the first day or two, bring your stop loss up to break even and give yourself as close to a risk-free trade as you can. Don't be a hero in these markets. Protect your capital at all costs. Eventually, the markets will simmer down and we will have a sustained uptrend once again that will be much easier trading environment. So protect your capital until then and take trades cautiously as you see them until then. Anyways, that's my thought for the week. Take care, guys, and enjoy your trading week. Talk to you soon.